What's your interest rate? One of the two most often asked questions at the beginning of the mortgage loan process. Will this property be your primary residence? The residential mortgage industry considers three types of occupancy status. The occupancy status will affect your interest rate. The three categories of occupancy status are primary residence, second home or vacation property, and lastly, non-owner occupied or investment property. If all the other factors that will establish your interest rate are the same, the determination of occupancy status will adjust that interest rate. Primary residence. Sounds pretty simple, right? You plan to live there. However, when you plan to occupy the property, and does the location make sense relative to your employment, will come into play. Most of your loan documents will establish your intent to occupy the property within 60 days of closing and state your intent to continue living in the property for at least 1 year. If you are employed in one town and are living in another, the property must be within a reasonable commutable distance to qualify as a primary residence. If you work remotely from your place of employment, you may have to write a statement and obtain a statement from your employer that this is in fact the case. Second home or vacation home. This is a home that you occupy in addition to your primary residence. It should be remote in distance and in time of travel from your primary residence. In other words, it can't be in the same town. The property must be suitable for year-round residence. And additionally, the property cannot be subject to agreements that require you to rent the property or give a management firm control of the occupancy of the property. Now, non-owner occupied, that's the most simple. If the property does not qualify as a primary residence or as a second home, then it is investment property. All other factors being equal, the difference in interest rate between a second home and a primary residence may be very close, if not exactly the same. But a non-owner occupied property will be different. In fact, I was looking at some scenarios this morning, and the difference between a second home and an investment property was 1.375 or 1 3/8 percentage rate in their interest rate. Now, this tempts people to try and finance investment property and call it a second home. But let me give you a stern warning. Don't do it. This is mortgage fraud, which is a very serious offense. Like all other factors that can affect your interest rate, discuss them thoroughly with your loan officer. Is it your primary residence, a second home, or investment property? I hope you found this episode of What's Your Interest Rate informative and thought-provoking. Until next time, what's your interest rate? Let's determine your occupancy status. This has been a presentation of My Home Loan with Jay.